Good evening, everybody. My name's Brad George. I'm the CEO of Orosur Mining. I'd like to say, I suppose, it's nice to see happy smiling faces, but sadly that's not the case. I'm in fact in Eastern Australia right now where it's about 4 a.m, so if I nod off during the talk, I do apologise. I'll give you a little snapshot of our company over the next few minutes and then we can launch into questions. Firstly, some technical numbers. We conducted a placement last week in the UK, which was announced on Monday, where we raised £4 million before costs. The paperwork is still being completed, and so I caveat these capital structure numbers by noting that they assume completion paperwork this week. That being done, our fully diluted share base would then be of the order of 200 million shares, a market cap of some £40 million, and giving us roughly $6 million equivalent. Our major shareholder list will clearly have to change once we get the details of that raising. Newmont didn't contribute and therefore they will dilute slightly, but they will remain our largest shareholder. The share price is more interesting. When myself and the other current directors joined the company in April, May, June of this year, the share price certainly was having a rather rough time of it. Things began to move in August as we neared the anniversary date of the Ansar joint venture. Spiked significantly when Newmont announced that they would continue, and then an even larger move in late September when Agnico joined Newmont, hitting an intraday peak of 46p in the middle of October and has since fallen back to a level that we hope we can then build from. Orosur is not a new company, although it might be new to many of you here this evening. In fact, it operated the San Gregorio mine in Uruguay for 20 years, over which time it produced some 1.5 million ounces. San Gregorio came to an orderly end in late 2018, as all mines eventually do, and the company since then has been involved in the necessary remediation and rehabilitation work. In the middle of this year, the company recognised that it needed to restructure itself in recognition that it was in fact moving backwards from being a producing company to an exploring company, which, while still part of the same broad sector, is a fundamentally different business requiring different skill sets and a different cost base. We have a whole new board of directors and we've reduced our overhead costs significantly with a very good team now spread around the world, far better suited to what we're doing in Colombia. Indeed, Colombia itself is not new either. We first acquired the Ansar project in late 2014. As part of an acquisition of Canadian-listed Waymar Resources. Waymar had done some previous work. We subsequently did some drilling work on the project, but then there was a few years of abeyance as we were concentrating on the end of the San Gregorio mine. This led to the joint venture with Newmont in late September 2018, and then a couple of years of quiet work as Newmont were busy doing other things on a much larger scale. This all then came to a head in September of this year with the second anniversary of that joint venture, the main change being an increase in the annual expenditure requirement from $1 million to $4 million per annum. That certainly significantly changed the complexion of the project and led Newmont to invite Agnico to join them on a 50-50 basis to jointly share the responsibility and the cost of the project. That's advanced well, and as we speak we are drilling and results are expected reasonably soon. I won't go too much into geology given the mixed nature of the audience. We are in the late Miocene, which is quite young in geological terms, between 5 and 10 million years old, in the northwest Cordilleran region of Colombia, in what we refer to as the Mid-Cauca belt. Like most of these Cordilleran regions, we see two very distinct but essentially related styles of mineralisation. The first of these is the porphyries themselves. These are the very large intrusive systems that are ultimately the source of all the metals. These are big, they can be billions of tonnes. As a result of their tonnes they can contain tens of millions of ounces, but the grade is low. La Colossa being an example down here, a grade of less than 1 gram per tonne. So superficially they can seem very attractive, but their tonnage means that the capital costs can be quite eye-watering. Of more interest to us is the adjacent and associated epithermal vein deposits. These are These are veins that are sourced from the porphyry that are intruded out into the host rocks surrounding the porphyry, and that intrusive process is also a process of concentration. So while the tonnages are significantly reduced, the grade can be significantly increased, which is obviously attractive for economics. The most attractive of these, or the most well known of these, is the Buritica deposit, which was commencing operation only very recently. It was discovered some years ago by Continental Gold and acquired by Chinese Zijin Mining last year. That's something like 35 million tonnes at plus 10 grams a tonne for, or what currently stands at more than 10 million ounces in resources. The Ansar project is geologically somewhat analogous to Buritica in terms of its genesis. It shows the same characteristics, the same intrusive style. The question, of course, is the size. Quick snapshot of Ansar. We own it 100%, albeit subject to the JV with Agnico Newmont. Well located, 2 hours from Medellin, a large city, so good transport, good personnel, good suppliers, good road access, a very large land package covering the primary mineralised structure, the Aragon Fault. There are some existing exploitation and environmental permits that were associated with smaller scale artisanal mining that's long since ceased, but those permits have the potential to give us a significant advantage when it comes to permitting the gold in the future. Waymar and Orosur have drilled over 24,000 metres, predominantly into the central mineralised core, which we refer to as the Aptar deposit, and that's come back, which had been previously announced, as some very attractive high grade and quite thick gold intersections. This drilling was focused on a central core, and the mineralisation remains open in all directions. As importantly, we've also carried out historically some wide-ranging regional geochemical surveys and geophysical surveys that have shown anomalous regions that we feel to be as attractive or more so than Aptar, which have at this point not yet been touched. And of course, all of the work ongoing now is fully funded by Newmont and Agnico, with Orosur free carried to an ultimate level of 25%. The joint venture with Agnico and Newmont is a complicated one, and I won't go into the full details here. It's designed over 3 phases covering a total of 12 years, and we've just commenced the third of those years, so we have close on 10 years to go. The total spend over that period of time is $30 million, eventually culminating in a 43-101 compliant feasibility study, by which time Orosur would have diluted to a free carry 25%. A table of previously announced drilling intersections from the Aptar campaigns. The key takeaway here is that the Aptar deposit at Ansar demonstrates the 2 key characteristics that you want to see in a vein deposit, and that is grade and thickness. Without being flippant, the world is covered in narrow quartz veins, 1/2 metre wide, running 1 gram. They're all very interesting, but not economic. The far harder problem is finding vein deposits which are wide enough to cope with the machinery required and high enough grade to deal with the mining costs, and thus far Ansar is showing both quite significantly. We see numbers here of 10 metres at 58 grams, 14 at 40. This is the sort of thing that is quite rare, and this is the sort of thing that has attracted both Agnico and Newmont to the project. Another pretty picture, this is a drill section from a previous campaign. The other thing we like to see with vein deposits is continuity, by which I mean we like to see roughly similar thickness and grades from hole to hole. This tells us that the veins are likely to be moderately uniform, which economically is far preferable to spotty or patchy mineralisation. We've also seen metallurgical tests done on the Perth and Aptar returning very, very high recoveries with very standard techniques. Nothing in there that's deleterious, nothing in there that tells us it might be difficult, so it's reasonably bog standard. Both of these tell us that we have a reasonably high level of confidence that we can move this to a resource reasonably quickly. Stepping back somewhat in scale, we're now looking at the entire project area, and this is a map of the geochemical surveys done some years ago. We clearly see some very nice numbers at Aptar along the Aragon Fault, but we also see additional anomalies that are as good or even better at times, both north and south and even to the west. Now, the primary takeaway here is that Aptar was drilled not because it was the best target, but it was drilled because it was the easiest target to get at. The previous artisanal mines in the region had left behind tracks and access that enabled us to get our drill rigs in cheaply and quickly, and therefore it just made commercial sense to go there first. Everything else requires a bit of work. To the south at Guaymarala, we're seeing some very attractive anomalies. We'll look at those in the new year once we've developed some access tracks. To the north, however, both Jesuitas, which looks to be possibly an Aptar repetition, and further north at La Cecita, which is probably the primary porphyry source to all of these things, both of these sit within licenses that have not yet been granted. And we will work on those starting now to convert those to grant status with a view to working on those early in the new year. So where are we, what are we doing, and where are we going? COVID, of course, remains a challenge in most parts of the world, at least apart from where I am, so we're thinking of you all as I'm laying on the beach in a few hours' time. Colombia's been no exception, but the pandemic has abated there to a sufficient degree that with some rigorous protocols we can operate quite safely. Our first rig arrived early November and commenced drilling in mid-November. Our second rig has just arrived and will be commencing in a few days' time once we get the access tracks sorted out. The plan here is for 2,400 metres, which should take us through to February, March next year. The priorities of this first program are twofold. Firstly, to just simply verify the previous work, and then once done, to expand and to move Aptar through to 4D101 resource status. We have geophysical crews that are mobilising as we speak, and they'll be getting work within days. I noted last slide that we are converting our applications to granted tenements. That will be in the new year and give us access. We will be commencing more extensive and more detailed geochemical surveys in the new year. There's also the potential that once the first drilling program is successful, then Agnico Newmont will step in and assume control of the project. At the moment we're operating because we have the knowledge and the access and the infrastructure in place, but once the project is presumably seen to be of merit, then they have the right to step in and assume control. Beyond that, it's somewhat results dependent. I guess if the results of the work of the drilling of the geophysics prove positive, then those drill rigs grow and we drill and we drill and we drill. We're coming near the end. Orosur is a slightly odd company that being locked into a long-term joint venture that, if successful, could see us becoming the junior partner to a very nice project. The JV, as written, should it go to completion, has almost 10 years to run. And the key point I would make is that while the JV partners Agnico Newmont will fund the project, they don't fund the company. The other point I would make is that these epithermal vein deposits tend to grow quite slowly. They are not of a nature where there's ever any moment of epiphany which makes them monsters. We simply add tonnes and add ounces with every drill hole. So they're a long, slow grind. It could take several years before we properly understand what we're dealing with. Now, this length of time and this constant news flow, by definition, then throws up all number of possible scenarios as to how Orosur's position may play out, depending upon the outcomes. I won't predict which, but what we as a board have determined is that we want to be in a position that we are the ones that choose the outcome rather than having that chosen for us. Which brings us back to the recent capital raising, the primary motivation for which was to give us the balance sheet strength now so that we have the ability to maintain and hold our position in the JV as long as possible, and therefore allow us to negotiate the best outcome according to how the drill results come in. It's all about providing ourselves optionality. We can't predict what will happen, but we want to be in control whatever happens. So in summary, it's been a reasonably interesting 6 months. When we began the process, we had a share price south of 2p, almost no money in the bank, an uncertain future, and not much going on in the way of exploration activity. And we now find ourselves beginning the new chapter in this company's history. Uruguay is largely behind us, Colombia is in front of us. We have drill rigs turning in Colombia in cooperation with a couple of exceptional major partners. A solid bank balance, the share price is 10 times higher, all of which combine to a reasonably large degree to remove many of the risks and uncertainty, allowing us to focus on this quite exceptional project.
Are you all set to go with these, Brad?
Well, I've had my coffee, so yes, let's crack on.
Okay, here we go. First one, could you please explain why current investors didn't have the opportunity to participate in the placing?
That's a question I've been asked about 1,000 times over the last 10 years. It's just too hard. The UK regulations dictate that when you begin to move into the retail sector, the compliance load's horrendous. It would take us weeks or months to issue prospectuses and forms and documentation. It's always simply too hard. When you're dealing with sophisticated investors, whatever the hell that means, you can do a placing quickly and reasonably easily. But sadly, the retail space, it just doesn't really work.
Yeah, no, I've heard that a lot of times, and I know I believe it. Some retail investors tend not to believe it, though. But no, it is the case. It is getting harder. Also, what I don't understand, which is annoying, when you do listed, like it's happened with a present company I'm invested in, and in the ASX, it's standard to halt trading while they do a fundraise. I think it's a very decent thing to do, and yet. You can't do it on AIM, and yet so on AIM people start selling because the placing going on, and then you think, hang on a second. So yeah, it is a very tricky situation. They need to match those regulatory areas up, I think. Okay, next question: are you planning on purchasing some shares to show confidence in OMI?
That's a bit of a sore point with us. The answer is yes. So the short answer is yes. The long answer is I wish I had done so already. We obviously, as a director of a company, there are very strict limits on when you can trade. When I joined the company, the share price was, I think, 1.7p. It went up a couple of 1,000%, and I wasn't allowed to buy any shares because I was inside on the Agnico deal from day one. And then that happened, and then we went into blackout period with the annual account and then the quarterly report. And then we've never had, literally not had a day since we've joined where we've actually been permitted to trade. There's always been something happening that we knew about or some blackout period. So hopefully, fingers crossed, we may be in a position now where we can actually do something. Sadly, we've missed the run, but that's a story I'll tell my grandkids about.
Yeah, so annoying if you see the share price rising like that and you can't buy. But okay, so your recent placing, you mentioned potential new assets being considered. What commodities are you targeting? At what stage of development might you be interested in adding?
We are looking. We're not looking seriously. Our view is certainly let's work on the project we've got before we start running off to a new one. We are staying in South America. We're looking around the region, different countries. Gold is certainly our focus, but a couple of base metals look interesting. The issue, I guess, is that certainly with the gold market, things have become expensive. And so we need to be very careful that we don't, having just removed ourselves from one project, historical project in Uruguay, we don't then run off to a new one just yet. The issue we face, as I mentioned, is that the cost of entry to many projects now, or the expectations of vendors, has become not unrealistic, but certainly a bit greedier than perhaps they were 12 months ago. So we'll look for the projects. You can't really dictate exactly what you want, but you know it when you see it. But it may be that we end up having to go slightly earlier stage, perhaps. Not all the way back to absolute moose pasture green fields, but we're not going to be able to walk up and buy a 5 million ounce deposit with high grade at surface. So we may need to step back a little bit and go to the pre-resource drilling stage. So yes, we are looking, but we're probably some more many months away from getting anything finalized.
Okay. There is a current drilling campaign at Anza. How long will it take, and how far away do you think results will be?
Somewhat out of our control. We began drilling on the 15th of November. that first hole is probably not too long away from completion. We pull the core out, we map the core, we log the core, we cut the core and sample it. It then goes off to the lab. That's when it sort of, we lose control of that. It really does depend somewhat upon how busy the lab is on the day that our samples arrive. Labs do things in batches. When a client sends material, the lab starts and it goes all the way through. So if our samples unfortunately arrive one day after some other batch, it could be weeks. If it arrives one day after, maybe we're okay. So I would expect, given particularly we're coming into Christmas, that we should, all things being equal, get some results early in the new year.
Excellent stuff. Okay, a lot of investors are looking at Greatland Gold for now, of how well an exploration company can go with a major farming. And I mean, the share price has gone crazy there. Why do you think Orosur has not yet received anything like that level of investor attention?
Well, we went up 3,000% from peak to trough, so we did get a bit of attention. Yeah, obviously the similarities are clear. I mean, it's the same sort of joint venture, same length of time. It's a major company, so I think quite clearly the comparison is a fair one. The differences, however, of course, that Greatland probably had 18 months head start. They began their JV, I think, in memory serves, March of last year. So they had that period to run. The differences, however, is that I think the market immediately saw the similarities, and therefore they priced in the Greatland share price, or the Greatland transition of the share price, before we actually done the work. They assumed we would be another Greatland, and they priced that in. So, which was flattering, but perhaps maybe a little premature. The differences, however, I guess going back to your question, is that Greatland's Australia, and Australia's reliably seen as a low risk jurisdiction. Albeit, I would say anyone who believes that, go to the Telfer region. I used to work there. It's like working on Mars. It's a tough part of the world. The other difference, I guess, is that their development scenario is locked in. Newmont is their partner. Newcrest is their partner. Newcrest runs the mine just down the road. So their project will simply feed into an existing operation. So that makes the development scenario for that project much more clear cut, and they will be able to be in production probably far faster, whereas our scenarios would probably involve having to build a new mine from scratch. So jurisdiction and just perhaps slight uncertainty as to how our development might work out in the future.
Okay, all right. How easy is it to operate in Colombia, and are you at all concerned about the single country risk?
You always have concerns about being a single country, but then the alternative is to be multi-country, which means your overhead costs are significantly higher. So I guess it depends on the country. I've been working in West Africa for quite a few years, and I can assure you that Colombia is a pleasant change. Every country has, I won't say political risks, but every country has its own particular idiosyncrasies, complications. Australia, for example, might be safe, but it's still complicated. It's expensive, and there are always issues there. Colombia is just different. So I don't necessarily see Colombia as a risk. I just see Colombia as a place where we need to understand the environment. We need to understand the political and the governmental system, and you work within it. So in terms of where it sits in the spectrum of risk, it's quite a good place.
Okay, just coming in here. Newmont, well, yes, I misspelled that. Newmont Agnico may take ownership of the project in 2021. What are the key variables for this to happen, and what could be the implications for the share price?
They won't take ownership, they'll take operational control. So the joint venture has another probably over 18 months, at the end of which they can then exercise their option to go to 51%. So that's an ownership issue. They have the right, however, at any time really from now, to assume operational control of the project. At the moment, their primary issue is that, being big companies, they have a much stricter view on movement of staff with COVID and various things. So they're quite happy to let us operate. What their criteria would be for them to step in, that's for them to say. Obviously, COVID would need to relax. And I would assume, and I don't speak on their behalf, is that once this first drilling program of 2,500 meters is completed, should that be positive, then I would imagine we might be getting a phone call saying, okay, off you go, lads. Now, I don't know that that would necessarily change much of the share price, because nothing will change. The same staff will stay, they will do the same things. It just means that I can sit back and do less work, or at least not have to be up on the phone every night talking to the guys in Colombia. So simply the management team steps back, the Agnico Newman guys step in, but the same field guys carry on. So not a lot would change, really.
Okay, but hopefully the share price will go up, yeah?
Well, I would hope the share price goes up for other reasons, such as by then we've got
Yeah.
drilling results. So yeah, fingers crossed.
Excellent stuff, Brad. I know it's silly o'clock where you are, so thanks very much for doing this, and have a nice morning, afternoon, and speak soon.
Okay, cheers.